Hi there, I'm Tyler Ballhorn, and this is the Stockscores Market Minutes for April 29th, 2013. This week's topic, understanding breakouts. A reminder before I get into this presentation that you can subscribe to this YouTube channel and get instant updates anytime I upload a new video. You can also subscribe to my free weekly newsletter at the address that you see on screen. The Stockscores Canadian Active Trader Expo will be in Toronto Saturday, May 11th from 9 till 11, and then Sunday, May 12th, again 9 to 11 in Montreal. For more information or to register for these free events, go to stockscores.com/skate. All right, let's get into this week's topic, which is identifying trend reversals. Breakouts through resistance are often considered buy signals. However, not all breakouts are likely to lead to market-beating trends. Breakouts preceded by uptrends often precede pullbacks. We want to be careful that we don't buy these kind of breaks because they often end in losses. Breakouts below downward trend lines often fail as well because they face the pessimism of that downward trend line. The ideal breakout is one from low volatility, that is, stocks trading sideways, stocks that are just under resistance and consistently trading in a narrow range. Those breakouts are more meaningful. Here's an example of a stock that broke through resistance today, but you can see that the upward trend on this stock started back in early March, and therefore it is not a stock that is trading with low volatility. It has been moving up for some time. On the other hand, we have a stock here that has been trading more or less sideways for the last 3 months, and that makes today's breakout more important. When looking at breakouts, it's not enough to move through resistance. It's important that they break from sideways, low volatility trading. Your success rate on these kinds of breakouts will be much higher. All right, let's get into this week's market analysis. The S&P 500 has rallied into resistance and is threatening a break to new highs. However, as I just discussed, the problem here is that the market is trending up into that breakout and is therefore likely that the S&P 500 will pull back in the short term. Now, it's a positive chart because we have maintained the upward trend line that we were threatening a little over a week ago. However, because the market has rallied into this resistance, there's a good chance it's going to stall here at least for a few days. Now, I think that this market is headed higher ultimately. Just don't be surprised if we see a little bit of a pullback in the very, very short term. That is the next few days. The TSX 60 has been recovering some of its lost ground over the last week, but it has not really yet broken that downward trend line. It is threatening it, and we could see a break of that downward trend line soon. And certainly, given how the oil and gold commodities have been behaving over the last week or so, that is a possibility. But as we see when we go to those charts, those are also facing some resistance soon. The 20-year treasuries, which is the chart of the U.S. treasuries for really an indication of an alternative to the stock market, these have been doing quite well lately, and that makes interest rates go down, which is a positive if you want to buy a house, but not necessarily a positive if you want to invest in bonds. And it does make the stock market more desirable in that regard. Money is looking for safety in the world, and it is going to U.S. denominated assets, and that is one of the reasons why U.S. treasuries have been strong. Now, next up is gold, which is bouncing back as I expected it would. That rapid sell-off that occurred a few weeks ago really put gold into a heavily oversold condition as it was far below its downward trend line. While we've seen prices rally back over the last 2 weeks, and it still has some distance to go until it gets to that downward trend line, so we should remain bearish longer term, but in the short term it is making up that lost ground. And so if you are a short-term active trader, something more like a day or swing trader, it's been okay to buy gold here and trade that bounce. However, if you are a longer-term position trader, you're looking for gold as a longer-term investment, I continue to be bearish because we still have falling tops on the chart. Oil has also bounced off of support and is now rallying quite nicely over the last week or so, but it is going to soon hit that downward trend line, which I've drawn in red. So expect the upside to end soon, and that may cause a market like the TSX to start to stall on its recovery that we've seen in the last little while. Finally, fear is in a downward trend. It's been that way for some time. I think for the market to return to some of the speculative stocks, we need to see the VIX start to break this downward trend line. Now, it hasn't happened yet, but it is encouraging if you want to see a resurgence in those speculative stocks. What's encouraging is that the bottoms are not falling as quickly as the tops, and that is a sign that the buyers are gaining a little bit of strength over time. They still haven't broken the downward trend line on the VIX, so we shouldn't get too excited yet, but fear is diminishing slowly. So my outlook then on US stocks, I am bullish. Canadian stocks bearish, but it is threatening that downward trend line. Gold neutral, really short-term optimistic, long-term bearish. And in the short term, I think we'll see a little bit more strength before it gets stuck at resistance. And a similar story with oil. I am neutral, although in the long term, I remain bearish. Short term, it looks like it has a little bit more upside until it hits that resistance. The U.S. market has rebounded up to resistance at its all-time highs, where it is likely to stall. The TSX has also rebounded, but remains in a bearish trend. Commodities are bouncing back, but are getting close to resistance, where the sellers will likely take back control. Well, that has been the Stockscores Market Minutes for April 29th, 2013. Have a great week in the market and trade well.